Ladies and gentlemen, we are one sequence away. I need one more sequence of data to confirm that the POI system has a 90% hit ratio on micro, macro, and super macro timeframes. This will put this algorithmic system in the top 5% of all quant firms on Wall Street. This video is going to quickly review a few things. One, there were a lot of questions about the warrants. I will go through those one after the other. Everything that you guys had to ask on Twitter, YouTube, etc. I compiled a list. Two, we're going to talk about the macro sequence and where we currently are. I know we talked about there being a 4-day window for shorts to be able to push GME. However, I have sequence confirmation on the POIs that it might take an extra couple weeks. We'll get into that in a minute. And finally, the warrants themselves, where they're trading right now, how they're going to behave moving forward as we enter our next super macro sequence, and what that's going to entail over the next year and a half of price action. Question number one is generally around the warrants, how they work, how they affect the shares outstanding, and we'll also get into how they affect shorts as well. Starting from yesterday and ending on October 30th, 2026 at 5 p.m., GameStop will issue their corporate action of 59 million warrants. 59 million new shares is 10% dilution to GameStop's current outstanding shares, which is around 450 million, okay? It puts you around 505 million total by October 30th, 2026. GME Common was trading at $28 just a few days ago. Now the GME warrants come out, they open up at 2 and now they're at 4. There's your $4 split that's been derived from the GME Common ticker in real time as GME Common trades at $24. Now, I don't believe that $24 is the bottom. I still believe we're going to 20. We'll get to that in a minute. However, where it gets juicy is what happens to the shorts that have to deliver the warrant. The warrants are a 10-to-1 split. So for every 10 shares that you own, you have to deliver one warrant. This is not to be so confused with a dividend, but it acts in the same way that shorts have to deliver those warrants if they are shorting the stock actively against the loans that they are currently borrowing from actual common stock owners. The short data and current metrics are around 65 million in shares shorted, which means that around $6.5 million worth of real buying power and demand has to hit the tape on the GME-WS ticker before October 2026. We also know that there's a lot more shares shorted than just 60 million, okay? We know it's around 200. So in actuality, think of like $20 million of buying demand hitting the GME-WS ticker is going to send that squeezing over 300% easily by October 2026. GME-WS opened at $2. It's already up 100% out the gate, something I talked about in the Discord constantly. You had to wake up early, make sure you bought it, or you were going to miss out on it. Also, there's problems at multiple brokerages right now. They won't even allow you to buy it. So the whole thing's a fucking scam. You're already paying a premium, okay? And that's how they want it, because they know the GME warrants are going to something like $12, if not higher. Question number two was, Nick, what happens when I actually buy the warrant? Do I have to actually call the broker and manually exercise? Do they get exercised automatically at October 30th, 2026? The answer is they do not get exercised automatically. If you buy GME-WS today, you have to exercise that in order to get your share of GME Common delivered to you. If you hold until October 30th, 2026, and you do not exercise, whatever money you put in your warrants will become worthless. You will lose all of it. You have to call your broker and exercise to get those shares, okay? If you are not going to do that and you're just going to play the GME-WS ticker for the squeeze of 300-400% that we're expecting, just sell them before October 30th, 2026 and take that profit. It works like any other security that you would buy shares for on the open market. Next question was, Nick, when I do exercise, what price do I actually get GME Common at? And that answer is $32. In the press release, the documentation, all the filings, that is your strike price for your transfer and conversion from your GME warrants into GME Common. It doesn't matter if GME Common is trading at 50. It doesn't matter if GME Common is trading at 18. When you exercise, you will receive shares of GameStop Common at that $32 strike price. Next up, macro sequence. I talked about this yesterday in the Discord. Twitter, you are always going to receive this information late. YouTube as well. If you want to know the exact up-to-date information to the exact hour of what the POI system is telling you, you have to join the Discord, period. Sorry. However, I still expect GameStop to go to $20 here. I understand that it's bobbling in your 24 range, but that's not good enough, okay? In order to break this super macro supply zone, which is noted in these two speed lines here, going all the way back to May 2024 and beyond, you need more demand liquidity. It is not enough yet to do this. It does not have enough yet, okay? There are certain things that you guys have to understand about how accumulation and distribution work. They're both volume-based, okay? And markup phases need specific amount of mathematical volume in order to make moves. It's something that the entire community still, after 4 years of analyzing these stocks, just doesn't understand. I do not see it to be mathematically possible for GameStop to mark up here without touching that 20 level. And the sequence delay that we're looking at right now is roughly 4 weeks leading into the first week or two of November. After that, you will get your squeeze on the micro. It'll be in the middle of December. It'll be 50% and it will be fucking awesome. Now, as for AMC, exactly similar to where the POIs are located. However, they can flip the tickers here. Just like when you saw GME and AMC diverge a week ago, they can do the same thing, but it can be more violent, especially after OPEX clears out on October 17th. You need to basically see AMC drop to that low 2 by the end of October on some major news event, okay? Something with dilution, something with cash flow being negative, something. Or it should squeeze leading into the end of October. That squeeze would be roughly 30%. You would get a quadruple top here. And then I will tell you what happens on the super macro after that. I am not confirming anything until I know which direction we diverge before the next POI. And finally, how GME and AMC are going to behave on their super macro based off the data that we receive from the POIs and the sequence over the next 4 weeks. We are about to enter the super macro sequence for both AMC and GameStop. But with AMC is a standalone ticker at this point in time, meaning you can still buy options for it, leaps 6 months out, 3 months out, however you want to play it and however your risk management tolerance allows with your portfolio. I believe it's going to take roughly 1.5 years for these things to play out. Once we confirm the macro sequence, we have some time yet before I give you that confirmation, but AMC is now standalone. GameStop is divided into 2 tickers. The warrants derive their price from GME Common, okay? The price of GME warrants is based solely on the demand for GME warrants. So you're going to get a 300 to 400 or more % run on the warrants themselves. Combine both tickers, the warrant run of 300 to 400% plus GameStop's run of 200%, you get a 500 to 600% total run. That is your super macro fractal. They split the run in between 2 tickers, so it's still super macro, but they force you to buy both, options for one, shares for another. Most people don't even know what the warrants are or how to buy them. It is complete misdirection from Wall Street, yet again, to fuck over retail any way that they can.